And at least one lawmaker is worried the IRS hiring freeze could cause problems for this year's filing season. Congressman Lloyd Doggett posted online the IRS won't be able to do its job processing tax returns. Financial professional Nathan Fort from Vital Retirement Planners joins us now with Midday with what we need to know this tax season. So the big question, Nathan, will that hiring freeze affect our tax returns?
Well, I know a lot of people are worried about it because that's nice to get that check in the mail. Yeah, that's right. But no, a lot of the experts are saying it's not going to impact refunds this year. But if there's extra work that needs to be done on your return, maybe there's some manual work that needs to be done back and forth, there could be some delays there. But if you submit your return in good order, early enough, there really shouldn't be a concern.
All right. So what tax changes should people be aware of before they file their taxes, which they can do right now?
Well, there's a number of changes. One of the bigger ones relates to business done through payment apps like Venmo and PayPal. In 2023, you could have as much as $20,000 paid to you through that platform. But in 2024, $5,000. If you have $5,000 coming through, and there's no minimum transaction, so just $5,000. Now, this isn't for someone repaying you for buying them a burger or the movie out.
Like, I'm worried.
You can go check your app. Yeah. This is for selling products and services. Even if it's a hobby, you're going to get a 1099-K. So you're going to have to file that and claim that income on your tax return.
Okay, everybody.
That's a big change.
Listen up.
Now, there's others when it comes to tax brackets. Those typically change to kind of keep up with inflation. So if you're a single filer, your standard deduction is going to be about $14,600. Joint filers, it'll be $29,200. But tax brackets have not changed from 2023 to 2024. But they're going to be remaining the same essentially. But they did increase in 2023, but not for last year. But keep your eye on the moving target for 2025. There's a lot of things changing that could impact the years ahead.
But we're counting on you to keep us informed. Right? What about tax credits? What can we take advantage of?
Child tax credits, $2,000 per child. There's also earned income tax credits. If you have 3 children, you can qualify for as much as a little over $7,800. If you are a working parent, you can write off as much as 35% of your work-related expenses. So that means you might have to do a better job of kind of keeping track of those expenses if you want to benefit from those write-offs. Another really big change I think is really relevant to people getting close to retirement is the increase in what they call catch-up contributions to 401ks. For everybody, it's $23,500 is a contribution limit. If you're over 50, you can contribute an additional $7,500 to get you to $31,000. If you're between 60 and 63, you can contribute, your catch-up is a little higher. So you can contribute a total of almost $35,000, a little over $34,000 to your Roth 401k or pre-tax.
That's a good check and change.
It is, yeah.
Okay, and so finally, what can we do to lower our tax burden, Nathan?
Well, for 2024, there are contributions you can still make to IRAs before April 15th. Okay. So you can take advantage of that. But what we recommend is looking through the windshield, not the rear view mirror, when it comes to taxes. So you want to look ahead at 2025 because a lot of the opportunities for reducing taxes in 2024 are past. But we need to look ahead at 2025 and consider all the different areas where we can be more tax efficient.
That is a lot of information you gave us.
It is, and there's more. But we don't have enough time.
We don't have enough time, but you know what? You can contact Nathan Fort over at Vital Retirement. Thank you so much. Happy New Year. We're glad that you're much better.
I know.
We've all gotten
I'm feeling
sick.
better.
So thank you so much for your advice. And